News this morning. At least 10 people are confirmed dead. More than 10,000 buildings damaged or destroyed as the Los Angeles wildfires are burning up the region. A new fire in the San Fernando Valley has prompted even more evacuation orders. Firefighters are beginning to contain the Palisades fire. This was the worst. It has scorched nearly 20,000 acres so far. Now the containment there is at 6%. For the Palisades fire. At least 20 looters have been arrested for taking advantage of these fire victims who had to abandon their homes. And then on top of that, residents there are facing an insurance crisis. Fox Business's Ashley Webster is live from Palm Coast, Florida this morning with more on that angle. Ashley.
Yeah, good morning to you, Maria. Look, we know that now thousands of structures have been destroyed by those wildfires, leaving homeowners with nothing but charred remains.
There's going to be an extraordinary number of claims being filed, and probably, from my experience as 8 years of insurance commissioner, the insurance companies are going to do everything they can to lowball and deny claims.
Well, insurers in California have been refusing to write new policies in areas considered high risk for wildfires. According to the California Department of Insurance, between 2020 and 2022, insurance companies declined to renew 2.8 million homeowner policies in the state. That includes 531,000 in fire-ravaged L.A. County. Consumer advocates, though, claim that has nothing to do with losing money.
The fact of the matter is, insurance companies in California, home insurers specifically, are more profitable than the nationwide average.
But the insurance industry says inflation and the high cost of reinsurance leads to higher prices that cannot be capped.
There are never caps on insurance costs due to the fluctuating economy. So insurance has to be able to pay out claims.
Yeah, but those insurance premiums are getting more and more expensive, as we know. Under new California regulations, once a fire emergency has been declared, insurance companies cannot cancel homeowners' coverage in that fire area and in the surrounding zip codes for a full year. The state is also forcing private insurers to write more policies in high-risk areas. California, as we've been talking about this morning, has the so-called FAIR Plan. It is an insurer of last resort, but the premiums for that plan are more expensive and provide significantly less coverage. In fact, they only cover fire. They do not cover contents or liability. So homeowners are forced to look for other types of insurance at the same time. Now, Maria, as these wildfires continue to rage, of course, the fear is that more insurance companies could decide to leave California, and that in turn would leave fewer options and even more expensive premiums. And if it's anything like Florida and the hurricane situation, sometimes those insurance costs can be higher than the mortgage payment. So it's very, very, it's a crisis, no doubt about it.
Absolutely
Maria.
Devastating. Ashley, thank you. Ashley Webster on the insurance end of it. John, your reaction?
My reaction is, the cost of home ownership is going higher in these areas that are vulnerable to natural disasters.
Sure.
Yeah, and as a result, I think this is going to put downward pressure on real estate prices in these areas, as well as perhaps also reducing home sales. I mean, my goodness, even if you had enough insurance to rebuild that home in Los Angeles that was destroyed by the fire, could you then go out and insure that home after it has been rebuilt at a reasonable cost? Probably not.
Well, I mean, look, the issue is ultimately going to fall on the federal government, Cheryl. I mean, it's interesting to see the relationship that Gavin Newsom and President Trump have had in the past. Now they're going to have to work together, and you're going to have to see some kind of federal aid. I'm sure that continuing resolution on March 14th is going to have to include disaster aid. I want to ask our lawmaker guest today about that, Cheryl.
Absolutely, because I want to pick up on something that Ashley was talking about there. FAIR right now, that backup policy of last resort covers about 500,000 homeowners who can't get private coverage, okay? Their exposure right now is at $458 billion. That was in September, potential exposure. That FAIR program only has $700 million cash on hand to pay claims. All right. California is the only state that does not allow private insurance companies, State Farm and Allstate are the two biggest in California, to incorporate the cost of reinsurance into their premiums. And this is why 100,000 Californians lost coverage between 2019 and 2024. You know, State Farm, they dropped 70% of their customers around the Santa Monica Mountains. Just the Santa Monica Mountains, Maria. Yeah. This is what's happening in this state. There is no money. And fair